Well, hello everyone, and first and foremost, can I give you a 360 tour here of the 9th floor of the PwC building here in Belfast. Have a little competition with yourself there and see how many of Belfast's landmarks can you spot. There's a range of them there. I'm saying nothing. You'll be able to spot them yourself, and I just want to make sure I go back to where I started now, and let me tell you why I'm here. This morning I was delighted to host a conversation for Danske Bank with Conor Lambe, John Paul Coleman, both from Danske Bank, as well as Emma Murray, who is a partner here at PwC. And we want to take on a range of conversation topics that are very high on the agenda for business in Northern Ireland. And here's a summary. So first of all, Emma started off by sharing the key finding, among many, but the key finding from the Good Growth for Cities PwC report. And she was quoting this morning, Belfast is the top ranking city in the devolved administrations, performing above the UK average for work-life balance, jobs, housing, transport, income distribution and safety. Now, all of that's very positive. So then I went to Conor, who is the chief economist and head of strategy at Danske Bank, and I said, right, Conor, the reality is that there's a soaring cost of living crisis in the UK. So what insights can you share on that from a local angle? So he said, particularly inflation is being driven, last year was driven by food costs and energy costs. Now this year, of course, the price of food has continued to rise and energy prices have changed. But he particularly said as well, is that falling inflation doesn't mean falling prices. Falling inflation means that you've got a slower rise of prices. And of course, he was talking about how inflation had peaked at 11% last year, but it's still very, very high. So on that note, I then went to John Paul and I asked him, right, central banks use interest rates in order to tame inflation. What is your thoughts on this? So he said currently, interest rates at the Bank of England is at 4.5%. The market is predicting that will go to 5.75%, but what he's watching is the 5-year swap rate to see where that might land over the next 5 years, and that can give more of a sense of where things will be on average as distinct to at the next announcement. So then I took on a topic that was submitted via people who had registered beforehand, and one of them was a cashless society. Are we heading there? And if so, what would be the impact? So I don't think that the past necessarily predicts the future in this case. So I don't think we can just extrapolate how much we've moved away from cash in the past and extrapolate it into the future. But instead I want to give a more nuanced approach to this, and there's a couple of things to think about. First of all, in a more cashless society, then of course you have more data. And if you have more data, then you have more insights about your consumers. So what this does is it first of all means that cash moves faster, or money moves faster, because then you don't have people with coins and notes, but instead money is moving digitally. But the second thing is then when you have something like a central bank digital currency, which is being mooted in a range of places, including in Europe, well then you've got digital balances that are backed by a central bank as distinct to a private company. But also, this data then can be used to understand consumers more, and perhaps in the future there will be more insights derived from one's spending and financial habits in general that could influence your capacity to repay as distinct to simply collateral. Now, then probably the topic that was most asked about in the questions before registration and indeed in the Q&A itself in the room was recruitment and talent and the labour market. So going back to Emma, she spoke about there's a couple of nuances going on in the Northern Irish labour market. Number one, there is a lot of competition between parties for those jobs, for those people to take those jobs. She mentioned that there is a skills mismatch, that the skills needed in the environment today aren't necessarily easily available, but also it takes time, of course, for universities and for apprenticeships and so on like that to actually keep up with the changing labour demands. She also spoke about the role of EDI, equity, diversity and inclusion. She also spoke about that there is higher wages, and also she spoke about that she was recently at an event with a generational specialist who was saying that today's next gen worker is likely to have 15 jobs and 5 careers. So then I went back to Conor and I said, right, a strong labour market can often point towards a strong economy. Is that the case? So he said, the Northern Irish economy is experiencing 0.1% growth. Now that means it's not a technical recession, but as he also said, it's nothing to get excited about either. But he said the resilience in the economy is coming from the fact that employment is as high. And he pointed out this figure, which I think is really striking. Northern Ireland has 2.4% unemployment. That is very, very low. Very low. Full employment is 4%. The unemployment rate in the south is 3.8%. So that will just show you that we are dealing with a very tight labour market then, if you are an employer. He said that the economy has been more resilient than expected as a result, but he said for businesses and indeed for consumers, it's a challenging time. It is boosted by employment, but it's challenged by inflation. Now, then I went and I asked John Paul about sterling, and his point was interesting, the fact that sterling is at a 12-month high and it is expected to go higher. So then I went back to him and I said, but the point is that if sterling is at a 12-month high, that has absorbed some of the inflation then, because the stronger the sterling, well then the more power it has to buy things in from abroad. And he was agreeing, well of course he was agreeing, because that's the way it works, which is that if sterling hadn't had that boost, well then inflation in the UK could actually be higher, or of course that could have hurt the economy in a different way. So then I also took on another topic, and that is alternative finance. Over the past particularly 15 years, the debt market in Northern Ireland has really expanded beyond traditional banking. There's now brokers that are available to help you to navigate the path of alternative lenders. There's alternative lenders out there who are taking on people with different risk curve, or with different risk scenarios, maybe people who are pre-revenue or haven't got a long enough track record of ability to repay. Also those who are simply willing to take more risk or on riskier aspects of business models, etc. And of course then there's also asset finance, which means your supply chain or your invoices. There's or your assets themselves directly that you can finance as well. So there is a more maturity now, there is a more mature debt market certainly in the north, but the point is that traditional and alternative financiers can work together. It's not that they're necessarily in competition, they can be very complementary. And perhaps a traditional bank can't lend at a certain interest rate because of A, B or C. If you can solve that A, B or C with another lender, well then that can work out very well, and you can refinance when the variables of A, B and C change in the future. So then I went on to ask Emma, what are the levers that lead to longer term growth in Northern Ireland? So she spoke about the fact, again, it was the word that came up the most this morning, was resilience. That the resilience shown by the Northern Irish people and the Northern Irish economy. She spoke about, of course, the fact that there is the 25th anniversary of the Good Friday Agreement. She spoke about the tight interaction as well between the educational institutions in Northern Ireland and business. And therefore we can have a faster turnaround time in Northern Ireland to deal with that skills mismatch than in other areas. And of course she spoke about the dual access as well that is available to businesses in Northern Ireland. Then we went to Conor to ask about consumer sentiment, and he characterised it very simply. He said it's weak, but it's growing. In other words, it's weak, but it's strengthening. And there is concern out there within consumers, but that is improving. Then from there we went on to, then I did ask John Paul about, the regional banking crisis in the US. What is going to be the impact from here? As I was quoting an interview with Jamie Dimon from JP Morgan, where he said it's nothing like 08. So what John Paul went on to say is that we do have to be aware that interest rates are at a different level than the way they were before. For about those same 15 years, they were at much lower rates, and we have to be cognizant of the fact that we're dealing with a very different economy, we're dealing with a very different financial market and its respective depth along the way as well. So all of that needs to be taken into consideration in looking at where the long-term drivers of those interest rate markets need to be considered. Then I finished off the conversation before we went to the Q&A, and I was talking about AI. Now, lots of people, of course, including myself, have been talking about ChatGPT. But what I've noticed over the past couple of months is that we talk about it an awful lot, and we talk about how it's a big shift. Yes, but if you want to embed it into a company or into your labour force, well then, of course, it's the same as any cultural change. People are going to be for it, people are going to be against it, but they need to be trained in how to use it, what difference it can make to them and to their respective jobs. They need processes and direction and role models. So I think myself, when it comes to using AI, there's two key skills that we need to have. Number one is prompting it, is actually understanding what we want it to do. But number two is not taking its output as a done deal. It needs to be authentic and it needs to be suited to the parties that we're actually dealing with. But also, I will say that I'm seeing more and more that AI is being embedded into our supply chains. So now the tech tools that we're using, the digital medias that we're using, the way in which we're interacting with other companies and organisations often are using AI in different aspects. So AI is not a journey you need to go on your own. It can often be factored into what you're doing throughout. Now, then we had questions about generational shifts, lifelong learning, EDI, and the role that banks and institutions play in handling inflation as well. It was a really brilliant and hugely interactive morning. Thank you so much to Claire and to Simon and to Robert for giving me all of the logistical support and, of course, the opportunity to work with you at Danske Bank and here at PwC. Thank you so much, and every best wish to you all.